Hello, everybody. Welcome to Wednesday. The S&P 500 was down almost 1.4% today. A couple of things that I think are really important to understand about today. First of all, today is the 17th of July. So if you go back to 1928, the best half of any month is the first half of July, and it peaks on average on the 17th of July and starts to show some weakness thereafter. August and September are poor months. October is an average month. November is actually a very good month on average. So we'll see how that plays out. But obviously, we had a great run for the first half of July. No doubt about that. So there is some seasonal weakness, some data that people that have money would be looking at and maybe taking some profits off the table and such. We really don't play those games, those short-term things. We look at the primary direction, which is still definitely up, no doubt about that. I mean, last year the market dropped from the end of July to the end of October, 10%. Primary direction didn't change. We hung in there, ended up with an 8.9% gain in November, and ended up with a 25+% gain, including dividends for the year last year. And so, I've been talking about that quite a bit. Get this big run, got the seasonality comes in, got the election coming. So there's going to be some reasons for people to kind of hold back here and whatnot, and maybe not get involved until the election's over. So, it might be some times in here to accumulate money a little bit at a time. The semiconductor index took a big hit today, and that was the other part of this story. So the Biden administration floated some more curbs of selling chips to Chinese companies. There's a couple companies, Tokyo Electron, et cetera, that are selling chips to the Chinese in kind of an roundabout way, possibly. And so, the market responded negatively to that. This is an ongoing thing that's been happening. It's not really that new of news. It's just talking about doing more of it. And that could affect, obviously these chip making companies. And so that index was down 7% today. And again, this is not new. Markets generally drop, and then there was some buying that came in each time because there's still a lot of money going towards chip companies because of the artificial intelligence component of it. However, it is stretched out. Even with the 7% drop, it's still almost up 29-30% actually so far this year. And so, these are big numbers. You get these big stretches to the upside, you're going to get pullbacks. This is kind of how this works, especially now. I've been talking about 5, 10, 15% downturns being sort of the norm, even on an annual basis. And so you got to be careful not to, overreact to these things as far as that goes. And so that's kind of what's happening today. Very interesting day. We'll see how this plays out tomorrow. Does some of the dip buying come back in or not? Maybe not. It was a pretty big day today on the downside. The NASDAQ was down 3.4%, for example. And so, sometimes that gets a little bit of a momentum. Maybe we'll have a day or two more downturn before we might see some stabilization. But, we're heading into that portion of the year. We just have to be patient and kind of wait for things to happen as far as that goes. So anyway, that's what's happening today. I look forward to being able to talk to you tomorrow. Thank you.